So here's the big question. You're interested in value investing and valuing and evaluating businesses on a deep level, but you don't know how, even after researching for hours, probably dozens of hours, hundreds of hours on the internet, and because nobody else shows you how to do it. This podcast has all those answers and much more about value investing and finance. My name is Jason Rivera. Welcome to Value Investing in Your Car. Hey, Jason here. In this episode of Value Investing in Your Car, I'm going to show you more proof that net income is absolutely useless. Before we get to that, though, I need to let you know you can get this podcast or this video as a podcast anywhere in the world for free on all major podcasting platforms, iTunes, Anchor, Spotify, Stitcher, SoundCloud, and more. You can get your value investing education anywhere in the world for free on the go as a podcast now. Okay, so I've talked in the past many times. I'll try to find all the links at least 3 times. I think I've talked specific blog posts and specific videos about why I never use net income. Never. When I analyze a company. Today, I'm going to give you more proof of why net income is absolutely useless by highlighting the results that Warren Buffett and Berkshire Hathaway released over the weekend from their first quarter results. So, headline, New York Times, and this almost exact same headline, well, at least this part, you can see in many other, you can see in the Wall Street Journal, you can see in Barron's, you can see in other financial publications as well. Berkshire Hathaway lost $49.7 billion in first quarter. Shocking, correct? That's a massive, massive, massive number, especially for Berkshire Hathaway and Warren Buffett. This is their biggest loss ever on a net income basis. So, of course, you would think this would be the headline, correct? But it's not the real story. They lost on a net income basis $49.7 billion, but their cash position improved at Berkshire Hathaway. They made even more cash, and they have even more cash in the bank than they already did. And their operating profits are higher than last year at the same time. So how can net income be negative when operating profits, which is, again, one of the major ones I use, and cash flow, again, one of the major metrics I use, how can these be so far off? So first off, Berkshire Hathaway lost $49.7 billion on a net income basis because of an accounting rule, keyword being accounting rule, changed from, I think, 2 or 3 years ago, that made it to where companies had to mark to market their investments. So because Berkshire Hathaway has an investment portfolio consisting of Coke and Procter & Gamble and companies like these, if those companies' stocks go up or down, every quarter they have to mark to market. It's called mark to market accounting. They have to mark to market those numbers or those fluctuations in share price in the portfolio every year or every quarter, even though Berkshire Hathaway is probably not going to sell most of those. It's owned Coke since I think 1988, and some of its other investments, literally Berkshire Hathaway forever, 20, 30 years. So most of these investments, unless Buffett makes a mistake, they're not going to lose or they're not going to sell the stock. If you're thinking this doesn't make sense in a real world because these are quote unquote paper losses, you are 100% correct. These are paper losses. So for example, and again, I don't know the share prices offhand, but let's say Coke's share price was $60 at the beginning of January. If it fell to $40 in, I think the last date was March 31st, 2020. So the first quarter, they would have to mark to market those losses of $20 per share on their income statement. This is why they have a huge, massive, largest Berkshire Hathaway loss ever. It doesn't really mean anything in a real world economic sense. Again, Berkshire Hathaway and Warren Buffett aren't going to sell shares in things like Coke and Procter & Gamble, stuff like that. They're just not. While they did sell some other stock, notably Buffett sold Berkshire's entire portfolio worth of, I think it was American Airlines, Delta Airlines, Southwest Airlines, and United Air, four of the major airlines in the United States. While Buffett sold those because he said the economics changed on those. For things like Coke, the economics aren't going to change in the long term unless this coronavirus lockdown lasts forever. But if or lasts for a long time, if that happens, we're all going to have bigger problems than worrying about things like mark-to-market accounting. So, in a real-world sense, net profit is completely useless. Again, these are paper losses that can and do fluctuate every single day in a stock portfolio. Your shares go up and down every single day in a share portfolio. Makes no sense whatsoever. So I could see it when you sell it. So for example, he likely lost a lot of money on the Southwest and the other airlines. I could see that marking to market that loss because you sold it. So you have a specific buy price, specific sell price. I don't understand why the accounting rules and regulators made the kind of fluctuations change like that. Another way to illustrate this is down here in this. The loss overshadowed a 6%. And again, this is more than about halfway, a little less than halfway down the entire report. So they spend about half the news article here talking about the net income loss and ads and stuff like that. About halfway down the page, they start talking about the real world economics of the company. The loss overshadowed a 6% rise in Berkshire's operating earnings, which track the performance of the company's owned and operated businesses like insurer Geico. Mr. Buffett regards that as a better measure of the company's overall performance and has long argued that quarterly paper gains or losses on its investments are often meaningless in understanding its overall health. I completely agree. They are, again, net income. If the above doesn't kind of show you that net income is useless, hopefully what we're going to talk about here in operating income and free cash flow will. So net income, biggest loss ever. Operating earnings are up 6% for the year. The actual earnings from operations of the company, not the paper losses, not the accounting losses. These are real world operational profits. They were up 6%. Down here, they increased their cash by, I think it was around 125 billion. So they increased their cash by 10 to 15 billion dollars in one quarter. Partially, yes, from the sales of the stock in the airlines, but also from increased operating profits. Because again, these are real world profits. This, again, hopefully illustrates how useless net income is. Net income, $50 billion loss, operating earnings up 6%, free cash flow up significantly. I don't know, frankly, how else to emphasize how useless net income is. It's literally just, in most cases, it's literally just an accounting number. Doesn't have any real world effect on the company. Again, operating earnings, the earnings you earn from the operation, and free cash flow, the cash you actually have in the bank, or in this case, that you massively increased in the bank and in investments. Net income. Again, I've talked about it several times. I'm trying to scan. I don't see anything else that I really want to talk about. So I'll wrap this up because I want to emphasize this as much as possible. Sorry, I'm trying to bring the screen back and it's kind of frozen. Okay, there we go. So I'm bringing you back. Hopefully, along with the other articles that I've talked about, other videos that I'll link above and below, this illustrates how absolutely useless net income is when it comes to evaluating a company. Completely two different metrics: $50 billion loss versus increases in operating profits and free cash flow. But again, why do companies use this? Why do big financial papers report the net income because it's easy, because that's the number that's been reported forever. Back in the day, there used to only be an income statement and a balance sheet. So there didn't even used to be a cash flow statement back in the day. It's been done forever and it's easy, but it doesn't make much economic sense. Net income makes little to no economic sense most of the time. And I hope, again, this illustrates that, along with the other resources that are above or below this video. I'd love to hear your thoughts on this. If you on net income, and operating earnings and operating profit and cash flow. Love to hear your thoughts on this. If you have them, let me know in the comments below. If you're listening on or watching this on the blog or on YouTube, thanks. Make sure to like, love, share, and subscribe and hit the notification bell on YouTube so you're notified anytime we release a new video, and we're releasing new videos all the time. If you're listening on the podcast, thank you very much. And make sure to do the same stuff: like, love, share, subscribe, retweet, download, all that great stuff. We deeply appreciate it. And we want to help as many people as possible, and doing that kind of stuff will help us, or allow us to help more people. So thanks for watching. Have a great day. Talk soon.